Good morning. Welcome to our Fiscal Basics Day 2 training. We want to thank you for joining us this morning to continue our coverage of fiscal basics. I'm Adrienne Balcazar, and I would like to introduce the LCAP-State and Federal Programs Unit. Joining us today is Helen Choi,
Good morning, everyone.
Laurel Estrada,
Good morning.
Augustine Garcia,
Hi, good morning, everyone.
Rachel Garcia,
Good morning, everyone.
Anita Lomali,
Hello, everyone.
and Christiana Park.
Good morning, everyone.
Also, we also have April Grease and Susanna Mendoza, our support staff that will be joining us. To access today's presentation, we ask you to please click on the link in the chat. The presentation can also be accessed through the link on the slide. When you click on the icon, as shown here, the agenda and the resources are listed and available here as well. We are recording today's meeting workshop, and we will be posting the link for this very soon. The Q&A, once completed, will also be posted here. We want to let you know of a new resource on our Canvas page. We mentioned it in day 1, but for those of you that are joining us today for the first time, we want to introduce our e-learning modules. So when you click on the e-learning button, as shown there on the slide, you will find the following modules on specific topics. So currently we have SSC, Advisory Committees, School Safety Plan, Title I School Ed Programs, and Comprehensive Needs Assessment. We will be converting last week's and this week's Fiscal Basics workshop into e-learning modules as well. And this is for your convenience to have quick reference. In addition to today's presentation, we have additional resources to support your work with the fiscal oversight of your federal programs. We have 2 resources available for purchase. One is on the fiscal fundamentals, and the other one is on time and effort reporting. We have updated these 2 guides, and so we want to let you know that they are available for purchase. If you follow the ordering information, you can find the ordering information on the link at the bottom of the slide. Today, we will focus on time and effort reporting, maintenance of effort, supplement not supplant, Title I Part A comparability, equipment inventory and capital expenditures, and federal program monitoring, specifically with fiscal monitoring and the fiscal side of the ELOP program. We ask you to please place your questions in the chat box, and we will answer any questions that we can as we are conducting our workshop. But we will follow up with the written responses in a Q&A format. And this will be emailed to everyone who's registered, but we will also post it on our Canvas page. These are some documents that we referenced last week, and we will continue to reference today. ESSA, or the Every Student Succeeds Act. We have the current authorization of the Elementary and Secondary Education Act, and this forms the legal basis for most federal programs, and this is statute. The Uniform Grants Guidance is another name for the Code of Regulations, federal regulations, which includes requirements for all federal education programs. We also have here reference the CSAM, which is the California School Accounting Manual, which is the state's guidance for fiscal accounting and determinations. And lastly, we'll refer to the EDGAR, which is the Education Department General Administrative Regulations. And this handbook is based on the Uniform Grants Guidance and provides additional requirements and clarification for programs that are operated by the Department of Education. One additional reference that we do want to share today is the CDE's Federal Grants Fiscal Guidance. The CDE's Federal Grants Fiscal Guidance contains information on developing policies and procedures and the federal and state program and administrative requirements. Other topics that you can find in here are allowability, time and effort, cash management, supplement not supplant, procurement, and inventory and property management. In addition, you'll find answers to frequently asked fiscal and programmatic questions in this document. You can download this from CDE's Federal Fiscal Guidance webpage, and you can find that link at the bottom of the slide. So, welcome again to our part 2 of Fiscal Basics training, and now I will turn it over to Helen and Anita, who will go over time and effort reporting.
Perfect. Thank you, Adrienne. In this section, we're going to cover time and effort reporting and provide you with information to deepen your understanding. Now, having a foundational and a comprehensive knowledge base of time and effort reporting helps to ensure that internal controls are systematized, that restricted federal programs are charged accurately, and that any potential compliance vulnerabilities are held at bay. We begin with the why and the Code of Federal Regulations. Now, connecting back to day 1 of Fiscal Basics workshop, we learned that all costs to federal funds or grants must be necessary, reasonable, allocable, and adequately documented, with compensation supported by proper documentation as required by the CFR 200.403G and 200.430G. Time and effort reporting is required for all employees, not contractors, whose salaries are either fully or partially funded by federal sources or used to meet match or cost share requirements. Now, this requirement applies to both full and part-time employees, as well as those receiving federal stipends. Note that if a contract paid out of federal funds was a co-applicant, then they too are subject to time and effort requirements for staff working within that contract with the LEA. So what triggers time and effort reporting and time accounting? Federal regulations specifically require time and effort documentation for all personnel who receive any payment or compensation from federal funds. This is in addition to other forms of timekeeping, such as time cards, that your LEA may already have in place. Please note that restricted state programs such as ELOP, the Expanded Learning Opportunities Program, and LREBG, the Learning Recovery Emergency Block Grant, will also require time and effort documentation. The documentation will depend and will vary based on the funding source in terms of whether it's Title I, Title II, Title III, Title IV, as well as the nature of the job duties. Payroll time reporting must also reflect the actual hours that were worked on each federal or restricted state program as indicated and should be aligned to the time and effort certification documents. Documentation that shows alignment between compensation and documentation that memorializes what has been done is key. Time and effort reporting is required no matter how much federal funding is included in a person's salary, whether it's just 1 penny or it's 100% of the pay. Now, there are 3 basics of time and effort reporting: the why, the how, the who, and the how. Why time and effort? Time and effort reporting ensures that there are adequate and consistent internal controls that accurately charge restricted federal programs. The who, as mentioned, is for any employee funded by federal grants required to maintain documentation showing that their time is allocable to the federal program. And finally, how is this done? It is through documentation of records that accurately reflect the work performed. This is the evidence about the past, kept in writing or some other permanent form. This is the official record that encompasses all activities that comply with established accounting policies and practices. So what are the requirements of these time and effort reporting documents that satisfy a reflection of accurate work performed? Well, records must, in according to CFR 200.430G, be supported by a system of internal controls which provides reasonable assurance that the charges are accurate, allowable, and properly allocated. Be incorporated into the LEA's official records. Reasonably reflect the total activity for which the employee is compensated, not exceeding 100% of compensated activities. Encompass both the federally assisted and all other activities for which the employee is compensated. Comply with established accounting policies and practices of the LEA and those found in the CSAM, and support distribution of salary among specific activities or cost objectives if the employee works on one or more federal award, a federal award and a non-federal award, or an indirect and a direct cost activity. So how can you ensure that your LEA has put into practice and systematized all that has been shared about time and effort reporting thus far? So let's begin by building a common understanding between a job description and a duty statement. Although not required by law, it is a best practice to create a duty statement for any employee who is paid from a federal grant or a restricted state fund that requires time and effort reporting, as this will most likely be requested during an FPM review. Often the duty statement is confused with a job description, and although these may seem to be similar, they do have distinguishable differences. To begin, a job description provides general responsibilities of the position. The scope is broad and it gives an overall summary of the role. And often it's the human resources department who will develop the job description. On the other hand, a duty statement is more specific. It itemizes and describes the tasks, functions, and responsibilities of a position and outlines what the employee will do daily or periodically. The duty statement helps the staff member understand how their work contributes to the overall mission of the federal grant. Duty statements also serve as an excellent source of evidence for when any federal program is FPM'd in your LEA. Duty statements are often developed by the administrative personnel responsible for the coordination and implementation of the federal grants and those assurances. Now, on this slide, we've provided a sample of what a job description for an instructional assistant would look like compared to a duty statement. At a glance, one can see that the job description includes logistical details such as who the supervisor will be, the number of hours that will be worked, and a general description of the position. On the other hand, the duty statement that we see here in the red box provides very specific details about what will be expected of the staff member with much greater detail. A well-written and meaningful duty statement serves as a personnel management tool for both the employer and the employee. It helps staff understand their responsibilities and how their work contributes to the overall mission of the grant within the LEA. It can serve as a useful tool for training purposes because it lists the specific tasks that make up the job. It promotes an understanding between the employer and the prospective employee of job performance and expectations. Once you have a detailed duty statements for positions that will carry out the work of the federal grant, you are ready for the next decision you'll need to make for time and effort reporting. The next step is defining and understanding what is a cost objective. As defined by the Code of Federal Regulations, Title II, Part 200.1, a cost objective is a program, a function, an activity, an award, organizational subdivision, a contract, or work unit for which cost data are desired. And cost data is factual information concerning the cost of labor, materials, overhead, and other cost elements which are expected to be incurred by a contractor in performing the contract. In our case, these costs are those incurred by the LEA carrying out the intent of a federal grant awarded through the consolidated application. In practical terms, a cost objective is a set of work activities allowable under the terms and conditions of a particular funding source serving a specific population. Next, Helen is going to help us connect what we just learned about the responsibilities of a position outlined in a duty statement to a cost objective and ultimately how the cost data of positions will be documented. Helen?
Thank you, Anita. So, as Anita mentioned, there are two types of cost objectives, a single cost objective and a multiple cost objective. So when trying to understand these terms, you have to think about the objective rather than the term cost. A single cost objective is a set of work activities where both the services being performed and the populations being served are allowable under each of the program or grants supporting the cost objective. The position or activity worked is dedicated to a singular purpose, a singular objective. If this criteria is met, this set of work activities of staff member is considered a single cost objective, even though it may be funded from more than one award. A multiple cost objective is when an employee works on more than one award and the activities performed may not be considered a single cost objective. The purpose of the objectives and the tasks is varied. It can also be a multiple cost objective when an employee works on multiple federal awards, a federal award and a non-federal award, or direct or indirect activity. It can also be when staff serves different student populations funded by different programs or grants. So let's take a look at some examples of a single cost objective focusing on the term objective. So you have an instructional coach or a paraprofessional who is funded with Title I funds. Because these employees work on one type of activity or purpose supporting eligible students in the core content academic areas and are funded by one grant, their work is considered a single cost objective. In the case of an instructional coach who is funded by two different grants, but all the tasks performed by the instructional coach in that role are allocable to both grants, then it is considered to be a single cost objective as well. A cafeteria cook has a singular job objective to prepare meals for students that meet guidelines and are nutritious. Although the cook may be funded from several grants or funds, because the tasks and activities are allocable to each of the funds, they too are working under a single cost objective, a singular purpose. A multiple cost objective is when the objective of the work is varied, where all tasks are not allocable to an award or perhaps all funding sources. It is when the employee works on one or more than one award and the activities performed may not be considered a single cost objective. In this example, a teacher on special assignment plans family workshops, supports new teachers, translates family documents, and plans and organizes the DLAC meetings. All of these activities may not be allocable under each of the various federal grants. It is possible that some of these tasks are allocable under a couple of grants, but not all of them. For example, the tasks related to planning DLAC meetings may be allocable under LCFF, but not Title I or Title II. Planning family workshops might be allocable under LCFF and Title I, but not Title II. Supporting new teachers may be allocable under LCFF, Title I, and Title II. And nevertheless, because all tasks are not allocable under all grants, this person's time and effort is reported under multiple cost objectives. And remember, if you are ever in doubt if an activity or task in a person's duty statement serves as a single or multiple cost objective, it is more prudent to report that person's time and effort under a multiple cost objective. Another document that is required for time and effort reporting is a position control report. This ensures that all the allocated funds from the grants are used appropriately to hire and maintain designated workforce for the grant, preventing overspending on personnel costs and demonstrating clear accountability CDE. So this must include the employee's full name, position title in its entirety, location of the position or department, the funding source or sources if there's more than one, the percentage of each funding source as applicable, hours of the position or full-time equivalency, and if the position is using Title I funds, you must also indicate the 85-15 rule that Anita shared in the previous presentation and all the allowable reservations. Once position control document or report is in place for the position funded by federal award, whether in part or whole, they're ready to set the additional documents in motion. And I just want you to remember that funding source is not always same as a cost objective. Okay, so a cost objective should identify how cost is related to the fund that is charged. For example, Title I is not a cost objective, but Title I intervention could be a cost objective. So just keep that in mind. Now for certifications. The type of documentation required for certification of time and effort is determined by the cost objective of the position. Employees who work solely on a single federal award or a single cost objective need only to complete a periodic semi-annual certification. This periodic certification must be prepared at least semi-annually or twice a year, be signed by the employee or the supervisory official having first-hand knowledge of the work performed, state that the employee worked solely on that single federal program or cost objective during the period covered by the certification. Employees who work on multiple activities or multiple cost objective of which at least one funding source requires time and effort accounting must complete a personnel activity report or an equivalent documentation. We call it PARS, or equivalent documentation must reflect an after-the-fact distribution of the actual activity of each employee, account for the total activity for which each employee is compensated, be prepared at least monthly and coincide with one or more pay periods, and be signed by the employee. So thinking back to the instructional coach and the cook whose tasks were deemed to be a single cost objective, they would use a semi-annual certification document. A sample of that certification is shown on this slide and is also included in the CSAM Procedure 905. Remember that the semi-annual certification must be after the fact, account for the total activity, be signed by the employee or the supervisor with first-hand knowledge of the services performed, and be done every 6 months or at least twice a year. And please note that neither federal regulations nor CDE require LEAs to use a specific format for documenting salaries and wages. As long as the format satisfies the requirements listed on this slide and in the CFRs, any document will suffice. However, semi-annual certification and PARS are a good choice to use because you can rest assured that they contain all the required information that will be requested, if anything, by the FPM reviewers. Another certificate is the blanket periodic certification. If a supervisor has a first-hand knowledge of work performed by several employees on the same activity, a single certification may be used for all those employees. A single certification or blanket certification must include the listing of all employees, cost objective worked in accordance with the duty statement, and time period covered. And again, the single record will be signed by the supervisory official having first-hand knowledge of the work performed by the employees. An example of this might be state-funded teachers who attended professional development series after contract hours and received a stipend from Title II funds. The names of all 20 teachers with all the other required information such as activity description, dates, and time period, and supervisor signature would be included on a blanket periodic certification. For an employee that has multiple cost objectives, CDE has shared this sample of a PAR or personnel activity report. This person's daily activities are detailed by time and funding sources for each day in the month. For PAR, it must include the after the fact. It must be after the fact once the work has been performed, account for 100% of the employee's activity, be signed by the employee, and be prepared at least monthly and coincide with one or more pay periods. This report can be quite tedious and time-consuming for some employees. This is why it's important to create a system that will assist staff members to create the PARs with ease. Perhaps ensuring the employee has the document prior to the start of the month or pay period would be beneficial so that the employee can account for their day at the end of each day. And encouraging the employee to keep a calendar of tasks worked on a daily basis will support them in completing this document accurately. Now that the employees have provided services that are allocable, and necessary to federal awards, and time accounting records have been completed, collected, checked for accuracy, and are up to code, and things are looking good, now the time has come to reconcile reports and the cost allocations. You might find that although your best estimates of how much time an employee would spend on certain activities were well thought out, the actual time accounting may be different than originally estimated. Perhaps employees spend more time working on tasks allocable under federal grant over another fund. And that's okay if it happened, but does your LEA reconcile budgeted distribution with the actual cost based on the time accounting reports submitted by and verifying that the amounts and the categories of expenses match the entries in the ledger with your business department? This process is important to follow to ensure accuracy. Budget estimates alone or other distribution percentages determined before services are performed do not qualify as support for charges to the federal funds. And in other words, after employees has completed time and effort reporting, you must true it up throughout the year. Your budget estimates at the beginning of the year versus actual services performed by the end of the year may be different. The process of estimating the budget and checking in on what actually is expended is a continuous process and is required. So, how does your system look for accuracy? Who reviews this each time and effort report? Who trains the staff on how to complete it accurately? And what are your policies and procedures that address reconciliation? So let's look at the reconciliation process for time and effort. First, the LEA system for establishing the estimates produces reasonable approximations of the activities actually performed. The closer you get, the better. Make sure to make time periodically to compare budgeted distribution with actual costs based on the monthly activity reports. A best practice is to do this at least quarterly. If the variance between total budgeted and total actual costs are 10% or more, adjustments must be made at least quarterly to the LEA's financial records. If the variances are less than 10%, the adjustments may be recorded annually. All necessary adjustments must be made such that the final amount charged to the federal award is accurate, allowable, and properly allocated. Your internal control system must include a process for the after-the-fact review of the reports. So, the lack of time and effort reporting is one of the largest audit findings by the U.S. Office of Inspection General, or OIG. Remember that costs that do not have adequate documentation are deemed unallowable and are subject to repayment. Here are some common issues that can affect compliance and reporting accuracy. Unclear duty statements, which leads to confusion about how employees should charge certain activities, employees charging non-allocable activities to federal programs, employees reporting their budgeted hours instead of their actual hours worked, and LEAs not following their own established policies and procedures, and LEAs lacking a reconciliation process for proper record keeping and validation. So in summary, the bottom line for time and effort reporting are as follows. Any employees paid with any amount of federal funds or required from a state program must keep accurate records to support time and effort benefiting the federal or restricted state programs. The LEA must have written procedures in place describing how this will take place in the LEA. Where are the forms found? When are they completed? When are they submitted? To whom? And who checks them? All employees paid from more than one source or cost objectives require more detailed reporting. The differences between the actual time and effort reported and the budgeted amount must be reconciled so work and the report matches up closely as possible. And remember that because this involves salaries and benefits, and compliance findings for time and effort can result in significant payback of funds. All right, so now, time to check for your understanding. So place your answer in the chat. If a position has a single cost objective, which documentation is most appropriate? A, semi-annual certification, B, PARS, or C, you don't need a document. Place your answers in the chat. Awesome. Thank you so much. That's right. Many of you have indicated a single cost objective position, a semi-annual certification would be most appropriate. And again, keep in mind that time and effort documentation is required for any employee funded by federal grants, and it must show that their time is allocable to the program. All right. Next question. An intervention teacher who teaches students reading below grade level for the first half of the day and provides English learner instruction assistance for the second half of the day, is this a single or multiple cost objective? Place your answers in the chat. Is this single or multiple cost objective? And you guys are right once again. An intervention teacher who teaches students reading below grade level and provides EL instruction services, this is a multiple cost objective. Services may be similar in both activities, however, the population serviced are different, and the services are divided between delivering reading intervention for any students performing grade level and providing instructional support for English learners specifically. Thank you so much, and this concludes this section, and I will now turn it over to Rachel.
Thank you, Helen, and good morning, everyone. So there are 3 fiscal accountability requirements that have historically formed the basis for federal education programs. And this includes maintenance of effort, supplement not supplant, and Title I comparability. Now, both maintenance of effort and supplement not supplant apply to multiple federal programs. However, only Title I includes a comparability requirement. So in this next section, we're going to take a look at maintenance of effort, or MOE. So maintenance of effort is a district level determination that's made annually by the CDE at the end of the fiscal year. Now, it applies to multiple federal programs, but it's applied somewhat differently depending on the program. And the purpose is really to ensure that states and districts maintain the level of fiscal effort in supporting education programs from year to year and not lower the local or state level of support as a result of receiving the federal funds. For ESSA programs, the state agency must demonstrate that either the combined fiscal effort per student or the aggregate expenditures of the LEA from state and local funds in the preceding year was not less than 90% of that for the second preceding fiscal year. Now, if the LEA fails to meet that minimum level in a given fiscal year, and for one or more of the 5 immediately preceding fiscal years, then all ESSA program funds must be reduced in the same proportion to which the LEA failed to meet that 90% requirement. The maintenance of effort calculations include expenditures from state and local funds for public education, including administration, instruction, attendance and health services, student transportation services, also operation and maintenance of plant, fixed charges and net expenditures to cover deficits for food services and student body activities. Expenditures that are excluded from the calculations are those for community services, capital outlay, debt service, supplemental expenses as a result of a presidentially declared disaster, and expenditures from federal funds. In the next few slides, we've included some examples of the maintenance of effort calculation. And so again, there are two ways to calculate maintenance of effort. So it's either the combined fiscal effort per student or the aggregate expenditures of the LEA. Now, the examples show both calculation options using fiscal years 22-23 and 23-24 as the comparison years. So in this first example, the LEA needed to spend $5,490 on a per student basis or $900,000 in the aggregate to meet the 90% level. And you can see that the LEA exceeded those amounts per student and in the aggregate. So in this example, maintenance of effort was met. In this next example, we see that maintenance of effort was also met. So again, the LEA needed to spend the $5,490 per student or $900,000 in the aggregate during the fiscal year 23-24. And so here we see that the LEA met the 90% level on a per student basis. And therefore, maintenance of effort was considered met because the LEA only needs to meet it in one of the two ways. Now, in this last example, again, the LEA needed to spend $5,490 per student during fiscal year 23-24 to meet that 90% level, but only spent $5,200 per student. That means the LEA failed to maintain effort by $290 or 5.3% on a per student basis. At the aggregate level, the LEA needed to spend $900,000 during the fiscal year 23-24 to meet that 90% level, but only spent $850,000. As a result, the LEA failed to maintain effort by $50,000 or 5.6%. Now, the state will use the percentage that is most advantageous to the LEA. So in this example, that would be the 5.3%. So that means that if the LEA also failed to meet the maintenance of effort requirement for one or more of the 5 immediately preceding fiscal years, then the state must reduce the LEA's allocation by 5.3% for all ESSA programs. Another important thing to note is that the Secretary of Education has the authority to waive the MOE requirements due to exceptional or uncontrollable circumstances or a precipitous decline in the LEA's financial resources. Now, in this next section, we're going to review supplement not supplant requirements. So all ESSA federal programs have a supplement not supplant requirement. And in general, this means that an LEA may use federal funds only to supplement or increase the level of funds that are available for the education of students, and in no case may federal funds be used to supplant or take the place of funds from non-federal sources. Additionally, there are a few programs, such as Title III, that require that the program funds also supplement other federal funds. Although the supplement not supplant provision applies to all federal ESSA programs, the test for compliance differs by program. So for most federal programs, the supplanting analysis asks what would have happened in the absence of federal funds? If in the absence of federal funds, the LEA would still have paid for the expenditure in question using non-federal funds, then it would be considered supplanting to use federal funding to pay for the expenditure. Now, for Title I, Part A, the test for compliance with the supplement not supplant provision changed under ESSA and instead looks at the methodology to distribute state and local funding to schools. So the core principles of the supplement not supplant provision ensure that federal funds provide an addition to, and not a replacement for, state and local funds. Federal funds are intended to provide something extra. The cupcake image here, it serves as a visual example for the supplement not supplant rule. So the cupcake base and liner represents the core funding and basic services that all students in schools must receive from state and local sources. This is the foundational layer and baseline that federal funds cannot replace. Titles 1, 2, and 4 are represented by the frosting and chocolate drizzle. So these federal funds are meant to add to existing state and local programs for specific targeted populations and purposes. And Title III is represented by the cherry on top. So these funds are meant to provide an additional layer of support for English learners, and as mentioned on the previous slide, are intended to supplement not only state and local funds, but also other federal funds. The supplement not supplant requirement, it ensures that federal funds benefit the intended population with additional services, rather than funding basic services that would otherwise be provided. So ultimately, it's a safeguard to ensure that federal funds are used to provide something more and do not replace existing non-federal funding obligations. Now, as mentioned, the supplement not supplant compliance test for Title I, Part A changed under ESSA, and it's much different than in the past. So prior to ESSA, LEAs had to ensure cost past a set of presumptions of what the LEA would have provided in the absence of Title I funds. These presumptions no longer apply to Title I. Now LEAs must demonstrate that the methodology used to allocate state and local funds to each school receiving Title I funds ensures that such school receives all of the state and local funds it would otherwise receive if the school were not receiving Title I funds. Now, an LEA receiving Title I funds must ensure the determination is met for both school level and LEA level expenditures in order to demonstrate compliance with the methodology requirement. Single school LEAs and LEAs that have only Title I schools are excluded from the methodology test for supplement not supplant. And additionally, if a grade span contains only one school, only non-Title I schools, or only Title I schools, then the methodology test is not required for this grade span. To determine that school level expenditures meet supplement not supplant requirements, the LEA must be able to demonstrate that each Title I school is allocated all of the state and local funds it would be entitled to if it were not receiving Title I funds. So in other words, the LEA's methodology must be Title I neutral, meaning that it does not take the school's Title I status into account, and thus does not reduce state and local funds to a Title I school. Now it's up to the LEA to determine what methodology to use when allocating state and local funds to schools, as long as it is Title I neutral. LEAs must also meet the supplement not supplant methodology determination with regards to LEA level expenditures. So when an LEA is planning to expend or obligate state and local funds and Title I funds on LEA-wide initiatives, the LEA must look at the funding it intends to use and then determine whether the Title I schools will receive their equal share of non-federal funds. So for example, if an LEA is implementing an intervention program across the district and using state funds to fund the program in non-Title I schools, and Title I funds to fund the program in Title I schools, this would be a supplement not supplant violation because the LEA is not providing state funds to the Title I schools on the same basis as non-Title I schools. Essentially, the LEA must make sure that the non-federal funds are neutrally distributed, and then the Title I funds are used for supplementary purposes for Title I schools. Now we will take a look at two different examples of school-level methodologies. But as mentioned, it's up to the LEA to determine what methodology to use when allocating state and local funds to schools. And there are many options available to an LEA when making this determination. So here we see our first example of a methodology, and it's based on student characteristics. So this example allocates state and local funds to schools based on a standard formula through which the LEA allocates dollar amounts based on objective student characteristics. In this example, there are varying per pupil allocations based on the characteristics of students in each school, including a base allocation per student, and then additional funding per low-income student, English learner, student with disability, and preschool student. To meet the supplement not supplant requirement for Title I, an LEA would use this methodology to allocate state and local funds to each school without regard to the school's Title I status. So here we see an example of a methodology based on personnel and non-personnel cost. This example allocates state and local funds to schools based on the average LEA-wide salary for each category of school personnel, such as principals, librarians, school counselors, and teachers, and the average LEA-wide per pupil expenditure for non-personnel resources, such as instructional materials and supplies. Now, both examples would meet the supplement not supplant requirement since each example is neutral as to whether a school is Title I. Titles 2, 3, and 4, as well as Title I Parts C and D, also contain supplement not supplant provisions under ESSA. However, as mentioned, the test for compliance with the supplement not supplant requirement is different from that of Title I. In general, federal funds may not be used to supplant non-federal funds that would otherwise be used for activities authorized under the program. And remember, Title III has a higher threshold to meet the supplement not supplant requirements because it requires that the program funds supplement not only state and local funds, but also other federal funds. So for most federal programs, such as Titles 2, 3, and 4, auditors presume that supplanting has occurred based on 3 tests. For the first test, auditors presume that supplanting has occurred if the LEA used federal funds to provide services that the LEA was required to make available under other federal, state, or local laws. The second test presumes supplanting has occurred if the LEA used federal funds to provide services that the LEA provided with non-federal funds in the prior year. And remember, for Title III, this also includes other federal funds in addition to non-federal funds. And lastly, the third test presumes supplanting has occurred if the LEA used federal funds to provide services for participating children that the LEA provided with non-federal funds for non-participating children. Now, it may be possible to rebut these presumptions provided that the LEA can provide documentation to demonstrate that it would not have been able to provide those services if federal funds had not been available. Some examples of this documentation might include local board action, budget history and planning documents, but keep in mind that this type of documentation, it might be sufficient to rebut the second or third presumption, but it would be very difficult to rebut the first presumption because you likely can't show that you wouldn't have done what was legally required. Supplement not supplant requirements are monitored through the Federal Program Monitoring Process, or FPM. And so here we see some screenshots for some of the FPM program instruments for which it is monitored. And the program instruments, they provide examples of evidence request and documentation that should be maintained to demonstrate compliance with supplement not supplant requirements for these specific items. But keep in mind that these aren't the only programs in which supplement not supplant is reviewed. These are just a few examples. And lastly, here we've included a few links to resources to support your understanding of the supplement not supplant requirements. And that concludes this section, so I will now turn it over to Augustine.
Thank you, Rachel. Good morning, everyone. So next up, we'll be taking a look at Title I, Part A, Comparability. A prerequisite for receiving Title I, Part A funds is that LEAs must demonstrate that all schools are providing comparable services using state and local funds. The purpose of the comparability requirement is to ensure that LEAs provide at least the same amount of funding to schools receiving Title I funds as they do to non-Title I schools. Comparability calculations are completed annually at the district level on a school-by-school basis. The calculations must also be done in a timely manner to ensure that all schools are in a comparable position and to allow the district to make the needed adjustments with the least amount of disruption in order to avoid the loss of Title I, Part A funding. To meet comparability requirements, LEAs must file a written assurance with the state educational agency, develop procedures for compliance with comparability requirements, and maintain records demonstrating that comparability of services calculations are conducted annually. When completing comparability calculations, LEAs must confirm that the student to full-time equivalent teacher ratios fall within a reasonable variance, and in California, this has been determined to be a 30% variance. The written assurance is filed with the state through the Spring Con app when LEAs complete and submit the Certification of Assurances form. Through the certification of this form, LEAs are assuring that they have established and implemented a district-wide salary schedule and policies to ensure equivalence among schools in staffing and in the provision of materials and supplies. Here you see a screenshot of all the legal assurances included in the Spring Con app, as well as a screenshot of the comparability assurances. LEAs must develop procedures for compliance with comparability requirements. Procedures should be in writing and should include the LEA's timeline for demonstrating comparability, the measure and process used to determine comparability, and how and when adjustments are made in schools that are not comparable. LEAs must maintain documentation to support the comparability calculations, as well as any documentation demonstrating that adjustments were made to staffing to ensure comparability. LEAs are required to maintain documentation for 3 years after the completion of the activity for which funds were used. However, we recommend maintaining documentation for 5 years. LEAs must use student enrollment to full-time equivalent teacher ratios to determine whether schools are comparable in one of two ways, either by comparing all schools within the LEA as a whole, or by comparing all schools within the LEA by each grade span group. And as previously mentioned, the student to full-time equivalent teacher ratios must fall within that 30% variance. So if schools are not comparable, then the LEA must make adjustments to ensure that all schools are comparable. Completing these calculations early will allow the LEA to make any needed adjustments with the least amount of disruption. It's recommended that LEAs complete comparability calculations and make any necessary adjustments in staffing or funding by October 31st of each year. And there are several exclusions that LEAs may use when determining comparability. Well, first, LEAs are not required to include any unpredictable changes that occur after the beginning of the school year, such as changes in student enrollment or personnel assignments. Schools with 200 or fewer students may also be excluded from the comparability calculations. If the LEA is a single school LEA or has only one school for each grade span group, then the comparability requirement does not apply. LEAs may also exclude state or local funds expended for language instruction programs and the excess cost of providing services to students with disabilities. And lastly, LEAs may exclude state and local funds expended under ESSA Section 113B1D and 113C2B for programs to meet the intent and purposes of the Title I Part A program. And in addition to the exclusions indicated on the previous slide, there are several school types that are exempt from meeting Title I comparability requirements. These include alternative schools of choice, continuation high schools, county community schools, district community day schools, juvenile court schools, opportunity schools, public special education schools, and youth authority schools. And so the CDE has developed calculation forms to assist LEAs with this process. The forms provide LEAs with immediate information on whether or not a school meets comparability. The instructions and calculation forms, as well as other resources related to comparability, can be accessed on the CDE website at the link provided. The calculation forms are in Excel format and provide LEAs with the option to determine comparability either LEA-wide or by grade span group. The screenshot included on this slide is the form for calculating comparability by LEA-wide average. So when completing the comparability forms, LEAs need to enter the school name, the school type, the grade span group, so elementary school is 1, middle school 2, high school 3, student enrollment, and total full-time equivalent teachers for all schools included in the school student counts report in CARS. The last two columns will automatically populate based on the student enrollment and FTE teacher information entered. The last column will indicate whether or not the school is comparable. So if you calculate comparability based on one method, such as the LEA-wide average, and find that a school is not comparable, it's recommended that you try the other option, the grade span group average, to determine comparability. If, after trying both options, the school is still not comparable, then the LEA will need to make adjustments to meet the comparability requirements. And one important thing to remember is that student enrollment data and full-time equivalent teacher data must be captured on the same date for every school within the LEA. So you'll want to maintain documentation that this data is captured on the same date. And also, the calculation should only include teachers whose salaries are paid using state and local funds. So if you have teachers who are split funded, be sure to calculate the FTE using only the percentage of the salary paid with state or local funds. So here's an example of a completed comparability form based on the LEA-wide average. In this example, you can see that middle school A is not comparable. So in this case, you would try the other option, which is by grade span group average. As mentioned before, the calculation forms are in Excel format. And the nice thing here is that once you complete the information in the LEA-wide average tab, it'll automatically populate the data for each school into the grade span group tabs, so you won't have to enter that information again. Also in this form, you can see that two schools are exempt as indicated in the last column. Elementary school C is exempt because it has less than 200 students, and high school B is exempt because it's a continuation school. The form will automatically populate the last column with exempt if the school has 200 or fewer students or meets one of the school type exemptions. So next we see an example based on the grade span group average with the same elementary and middle school data from the previous slide. The first screenshot on top shows the elementary grade span group, and the second shows the middle school grade span group. You can see that by using the grade span group average calculation, at middle school A, well, it's now comparable. In this example, it worked out for middle school A using the grade span group option. However, if after trying both options, the school is still not comparable, then the LEA will need to make adjustments in staffing or funding to meet comparability requirements. And here we've included a sample timeline for determining comparability. The sample is based on a CDE sample timeline that can be accessed at the link provided. It's important for LEAs to establish a timeline to determine comparability. Early determination of comparability allows the LEA to make adjustments with the least amount of disruption. As a reminder, comparability requirements are monitored through the FPM process in the Compensatory Education Instrument Item 14. Evidence requests for this item include the completed LEA comparability of services calculation forms, the current district-wide salary schedule, the LEA's policy to ensure equivalence among schools and teachers, administrators, and other staff, and the LEA's policy to ensure equivalence among schools in the provision of curriculum materials and instructional supplies. So if your LEA receives Title I Part A funds, it will be important to verify that your LEA has these required policies and procedures in place and is annually completing the required calculations and making needed adjustments if any schools are not comparable. Okay, so let's do a quick check for understanding. True or false? Student enrollment data and FTE teacher data must be captured on the same date for all schools. Hit that chat. True or false? Let's go to the next slide, please. Correct. Student enrollment and FTE teacher data must be captured on the same date for all of your schools. Thank you so much for your participation. I'm going to turn it over to my good friend, Laurel.
Thanks, Augustine. Our next section addresses accountability for equipment purchases and capital expenditures. As part of your procurement and inventory system, we'll take a look at requirements for equipment inventories, acquisitions, and disposal requirements. Let's start by taking a look at key requirements related to equipment purchased with federal funds. Item 16 of the Compensatory Education Program Instrument for Federal Program Monitoring requires that the LEA spending Title I Part A funding on equipment shall maintain a historical inventory for each piece of equipment with an acquisition cost of $500 or more per unit. Evidence of an equipment inventory is required as part of multiple federal programs, including Title I, Title III, fiscal responsibilities for ELAB, just to name a few. A link to all of the instruments is included in this slide, along with a link to CDE guidance on FPM. This slide lists all of the requirements for the equipment inventory that includes items purchased from Title I Part A funds. The inventory requirements for other funding sources might not be as comprehensive as this list, so best practice is to become familiar with all the program instruments. When in doubt, equipment inventories that include all the Title I Part A requirements would generally be adequate for the other funding sources as well. You'll note that the threshold figure of $500 contains an asterisk, which we will explain now. Effective January 1st, 2026, the threshold for including equipment purchased from federal funds in an inventory with all the required components will increase to $1,500. Moving forward, best practice is to maintain inventory records based on the threshold that was in force at the time the equipment was purchased. This means that LEAs should not immediately remove all the items in their inventory that were purchased for under $1,500 effective January 1st, but apply the higher threshold to items listed in the inventory. As a reminder, the equipment inventory is historical, so the $500 threshold will apply in the case of an FPM for items purchased prior to January 1st, 2026. Also beginning January 1st, the threshold will adjust biennially, so every 2 years, based on the statutory cost of living adjustment. It will be rounded to the nearest $50. These changes will impact the related object codes as well. Maintaining control of your equipment starts with tracking and labeling equipment items. Within your equipment control system, all equipment that is purchased with federal funds needs to be inventoried and labeled with purchasing information. LEAs must also ensure there are procedures in place to guard against any loss of equipment and materials. This screenshot offers a sample label indicating the LEA's name, school name, program it was purchased from, the purchase date, delivery date, serial number, and salvage date. Hopefully, we've made it clear that all non-consumable equipment and supplies must be accounted for if they exceed $500 in value, with this threshold increasing soon, and have a useful life of 1 year or more. But what about equipment valued at less than $500 or $1,500 after January 1st? How does your LEA account for small and attractive new technology? What is your system to prevent theft and loss of these items? A best practice might be to include these items on a separate inventory as part of your internal control system to prevent theft and loss. CFR 200.313 provides additional guidance regarding the responsibilities for recipients and subrecipients of federal program grants to manage equipment that is acquired in part or fully with federal funds. A control system must be in place to ensure safeguards for preventing property loss, damage, or theft. Any loss, damage, or theft of equipment must be investigated. The LEA must notify the CDE of any loss, damage, or theft of equipment that will have an impact on the program. Additionally, regular maintenance procedures must be in place to ensure the property is in proper working condition. Questions are offered on this slide for developing and reflecting on the LEA's system of internal controls to support management of equipment for their programs. We've included requirements here that apply to any equipment that is being purchased for the district program in providing equitable services for eligible students at private schools. The inventory of any equipment used at the private schools is maintained on the district inventory tracking system, and the tracking labels include the district name. Additionally, remember that equipment and supplies purchased with federal funds belong to the district, not to the private school. They should be included in biennial physical inventories as well. Now let's take a look at how LEAs must account for capital expenditures in their equipment inventory. Compensatory Education 16.1 addresses capital expenditures which have been defined as any single equipment or item for purchase of $10,000 or more. Note that beginning October 1st, 2024, this threshold amount increased from $5,000. So, for the 2025-26 FPM instrument, purchases for equipment using Title I Part A funds that exceed a unit cost of $10,000 must meet all the requirements included on this slide, and these components must be addressed in a written request made to CDE for approval prior to making the purchase. A link to the pre-approval capital outlay request form is included on the slide. The LEA request needs to ensure all required components apply to the purchase request. Specifically, the item must directly relate to a Title I Part A purpose and program as approved in the LEA's local plan. LEAs or county offices of education need to provide a supporting quote or bid for each capital outlay request submitted to the CDE for approval. The purchase must be intended to improve, enhance, or expand the Title I eligible program to be funded. The purchase must also be necessary and reasonable for proper and efficient administration of the Title I eligible program, and the equipment must be allocable to the eligible Title I programs, as opposed to a general expense required to carry out the agency's overall responsibilities. Now we'll take a look at another item related to equipment purchased with Title I Part A funds. CE 16.2 addresses the disposition or removal of the equipment from the LEA's inventory list. The language on this slide comes directly from the program instrument. When equipment acquired under a federal award is no longer needed for the original project, program, or for other activities currently or previously supported by a federal grant, the recipient or subrecipient must submit a request for disposition from the CDE. For the disposition of equipment purchased with Title I Part A funds with a fair market value in excess of $10,000, the item may be retained by the LEA or sold at a percentage of the current market value, with the proceeds going to the CDE. CDE requires LEAs to complete the Title I equipment removal form linked on this slide. For any items lost, stolen, or missing, the LEA must also report on the circumstances that resulted in the issue. Once the LEAs receive confirmation from the CDE that the equipment removal form is received, it's important to document it on the historical inventory form from the date and reason for removal of equipment. The last component related to equipment inventory for the Title I program is in CE 16.3. For this item, the LEA must conduct a physical inventory of the property, and the results must be reconciled with the property records at least once every 2 years. This is addressed in the Uniform Grant Guidance under management requirements for equipment for federal awards. Additionally, 2 reminders are noted per this guidance. These include that a control system must be in place to ensure safeguards for preventing property loss, damage, or theft. Any loss, damage, or theft of equipment must be investigated. Also, the recipient must notify the CDE of any loss, damage, or theft of equipment that will have an impact on the program. As mentioned, the equipment disposal form is the means of communicating this information. Additionally, regular maintenance procedures must be in place. As we say in many aspects of education, if it isn't documented, it didn't happen. So be sure to maintain adequate documentation of these physical inventories. To wrap up this section, this slide offers some key points for keeping track of equipment inventory and maintaining control of equipment that is allocable to federal programs. These include maintaining a historical inventory of all equipment with a unit price of over $500, which will soon change to $1,500, inclusive of district-owned equipment being used at private schools for equitable services, and keeping inventory copies at the district office and in the school offices. Additionally, conducting a reconciling physical inventory of your equipment at least once every 2 years and maintaining a control system to prevent loss, damage, or theft. And with that, I'll hand it back to Adrian, who will continue with information about federal program monitoring.
Thank you, Laurel. So as we wrap up these 2 days, remember on day 1, we said there are many strings attached to the money. And over the past 2 workshop days, we've talked about these strings and shared the rules and requirements of federal programs. Remember, these rules are put in place to make sure there is no waste, fraud, or abuse. The monitoring process is the way that the state and federal government ensures that there is no waste, fraud, or abuse. There are state audits, federal audits in conjunction with the state audits. There's federal program monitoring and inspector general audits conducted by the federal OIG, which currently we're not sure the status of these particular audits due to the state of affairs these days. But we are going to take a closer look at the ways in which the fiscal compliance is monitored through the Federal Program Monitoring, or FPM, process. In order to understand the FPM process, it's important to know the purpose of the funding. This is the state and federal funding graphic that we shared with you on day 1 of this workshop. We want to remind you why Ed Relief, ELOP, and LREBG funds are included. Although these funds are outside of the state's LCFF and federal program funds, they are state restricted funds and do require adherence to the federal requirements. Part of the FPM process requires evidence to show that there is fiscal compliance. We have provided two of the instruments today that are used to monitor fiscal compliance in an FPM review, in addition to the other instruments that were highlighted during these past 2 days. The first one is fiscal monitoring. This instrument addresses primarily the title programs. There are 8 items that must be addressed, and they're all related to fiscal allowability of these federal funds. The fiscal side of the Expanded Learning Opportunities Program is also included during the FPM process. 2023-24 was the first year that ELOP was included in the FPM reviews. The ELOP instrument monitors the ELOP financial resources that are used to support program objectives. It ensures that there is compliance with funding regulations and the accountability of funds. So this is the list of the most frequently non-compliant items from last year's 24-25 FPM reviews of the fiscal monitoring and the ELOP fiscal instruments. You can see that there are some overlap between the items reviewed. Time and effort requirements and procurement often are two of the highest frequency of LEA findings. You can find all of the FPM resources in the fiscal monitoring and ELOP folders, as well as the other programs in the CDE's box. The link here is provided for you on this slide, and we highly encourage you to bookmark it so that you have easy access throughout the year in reference to FPM and all the necessary resources and samples that they do provide. So FM1 and ELOP1, again, is one of the highest items found out of compliance. And this is, again, the time and effort requirements. As it was shared earlier, the findings were due to missing time and effort documentation. And so the documentation shows activities were either not allowable for the program, or the LEA did not follow their own internal control process, or the LEA did not follow their policies and practices. And so again, here is stated what is required, but just for your own knowledge, any of these that were not adhered to would have given the district a non-finding in this particular item. For FM4 and ELOP4, this pertains to procurement, and there are many components to procurement, which could be why it's one of the highest items of noncompliance for both fiscal monitoring and ELOP. The LEA must follow the appropriate procurement processes for all contracts. In addition, the LEA must have and use documented procurement procedures. And key points are included in this slide. Specific guidance regarding procurement is provided in the CSAM, and a link is included in this slide. CDE also provides a yearly state and federal procurement flowchart to help understand this process. We have provided the 2025 procurement flowchart as a handout, which is linked to this slide. When it comes to procurement, it's important for program and fiscal staff to work together to ensure compliance using the CDE and the federal guidance. As we conclude the 2-day fiscal workshop, we want to circle back to what I had said in the beginning of day 1, and that was implementing your federal programs must be a team effort. Fiscal staff plays an important role by completing tasks such as processing payment, tracking, and reporting expenditures. Program staff determines allowability. making sure that expenses are charged to the correct program accounts, and ensures that timelines are followed, to name a few responsibility. Again, this is to all minimize any risks of the LEA not meeting their oversight responsibility of public funds. And so this concludes our Fiscal Basics workshop. Again, please take time to provide us with any feedback by using the link in the chat or this QR code or the link on this slide. And on behalf of the team, thank you so much for attending today's session, and we hope that the information provided has been helpful. Remember, we are going to convert this to e-learning modules so that you can take a look specifically at any specific topic you want to refresh on. And so again, thank you, and we wish you a happy winter break as well as a great afternoon.